Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Triple Q report for Thursday, January 20th, 2022. Before we look at the charts, I just want to, as usual, encourage you to please click like each and every time you watch the daily Triple Q report. It does help us out a great deal with whether or not we're found or not on YouTube with the searching for, Triple Q analysis, Nasdaq-100, so forth and so on. And subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the daily Triple Q report. And so being notified early will allow you to see the material when it's fresh, relevant, and usable. Anyway, let's take a look at the charts. They're all daily charts. We did close below that 371.5 long-term channel bottom on Wednesday, and we did so by the full 1% margin. So this is a valid sell signal that I'm going to say should manifest over the next 3 to 5 weeks down to 322.75, rising gradually. So that is the outlook now really through February. Holding below 371.5, this market remains heavy. Downside momentum can increase. We can accelerate down to 322.75 within as little as 3 to 5 weeks. I don't expect any prolonged consolidation on the way down. I think it'll be pretty steady with continued daily settlements below 371.5, maintaining a 322 and 3/4, 3 to 5 week downside target. And I'll just mention that if we do close above 371.5, that would be, well, there's the way I would phrase it is a failed long-term sell signal, in essence, a valid sign of stability and even bullishness as we continue then into February trade. My initial kind of big picture target would be 398.03, and that would be about 2 to 3 weeks. I'll talk more about that in a moment. Let's take a look at the support and resistance right now. You've got 371.5 above the market, of course, able to contain buying through February, and as I say, below which 322 and 3/4 remains a 3 to 5 week downside target. On the way down today, 365.23 can contain initial selling. Now, we settled not far from that level, so it is possible that we may break or open below 365.23, and if we do so, 356.5 is in reach today. This would be consistent with the expanded volatility I think we can expect now into February trade. 356.5, if tested today, can contain session weakness, and if we break 356.5, 350.32, 350.32, then in reach by the closing bell. And once again, continued settlements below 371.5 maintains a heavy dynamic into February trade, through February trade. The 320s anticipated over the next 3 to 5 weeks. And so for you option traders buying in the 320s, 325, 330 puts that don't expire for at least 2 months. So you've got some decent delta on the way down without time decay element. I think could be a play that you may consider. And then, of course, if we close above 371.5, you would liquidate that put position. At least that would be my recommendation. Let's take a look at the possibility of pushing or even opening today above 371.5. We do have minor resistance at 373.39 and 77.73. I would expect decent intraday activity at both of those levels. But if we push, especially if we open today above 371.5, there is the possibility with this kind of volatility that we could rally up to 379.63 today. And that is really nothing more than a new descending 1/3 speed line that is based entirely on yesterday's low against the all-time high in November. And so that is trend defining. It's a significant upward pivot point into next week. So yes, closing above 371.5, I do think that the 398.03 formation is in reach over the next few weeks based on just closing back above that significant channel bottom. That failure to follow through is itself a sign of strength. So 398.03 would be a 2 to 3 week target if we can close back above 371.5, which is represented by that horizontal line here in the graph. But it is 379.63 that actually pivots the market north into next week and adds bullish momentum to what could be a recovery. So closing above 371.5, I do think we can expect the market to maybe grind its way higher into February trade, but closing above 379.63 would be an accelerator. And I would then anticipate with the settlement above 379.63, and the reason I'm mentioning this today is because it's not out of the realm of possibility that we just might close above 379.63 today. I think it's highly improbable, but anyway, closing above 379.63, that 398.03 channel top, then a 1 to 2 week objective where we should top out on a weekly basis, possibly through the balance of February trade, and that is a meaningful upside pivot point itself into later February and March activity, then anticipating the 420s, but way ahead of myself here. Bottom line is we are heavy now below 371.5. I don't know how many times I've said that already, anticipating the 320s over the next 3 to 5 weeks. If we close above 371.5, I think we've got a good January low, and you can anticipate the upper 390s or that channel top at 398.03 within about 2 to 3 weeks. And once again, closing above 379.63 should actually entirely reverse momentum and accelerate upward trade into next week. That 398.03 formation considered a 1-2 week target at the very most if we can get up and over 379.63. I'm going to leave you with the support and resistance for today. You can print it off your smartphone or your desktop, whatever the case may be. Please click like each and every time you watch the daily Triple Q report, and don't forget to subscribe to the Wicked Stocks YouTube channel. And that is all I've got for Thursday's daily Triple Q. I'll be back tomorrow for Fridays. You have a great evening.